Good morning, everyone. Welcome to the London session. Let me just adjust my camera here. Okay. Yeah, so Thursday. If you've had profits for the week, try to save them. Now, I've been trading for about 17 years. And out of the 17 years, I've been trading futures for about 12, specializing in crude oil and gold mainly, and then popping into equities every so often. Recently Nikkei, but generally ES during power hour. I am looking at this, front-running this failed auction trade potential in gold, so I'm going to run you through that. Let me make this into a big screen now. So it is a front run, so only using a small amount here, 5 micros. So let's go up to the weekly chart as always. So weekly chart, we obviously had a bit of a sell-off happening and not much to figure out from here. So, you know, uptrend, all-time highs, blah, blah, blah. All-time high is always more difficult to trade around because they can go into a sell-off very quickly. But for now, I'm trying not to fight the trend too much and just looking for bottoms of ranges, which you can kind of see us arriving in here. I also have some intraday levels that I'm going to talk about in a minute, but generally we are at the bottom of the range for now. There is a chance that we go lower because this could be a distribution, which if you follow Wyckoff strategies can be followed by a liquidation phase. So we're going to be looking for some buyers to step in around here. Now, a couple of things have happened this morning. I haven't spoken to anyone yet, so obviously my throat is deciding to play up. But even on the 4-hour chart, we're arriving in the area of the bottom quartile. So obviously, there, like I said, there can be a breakout trade. However, this is London. This is not the main session for gold. And whenever we sort of take out the Asia low, which is going to become more obvious as I start to drill down through the time frames, that becomes a slightly better option. Even though gold can trend during London, usually is driven by some kind of a catalyst. We've had a lot of news from the Middle East. And just let me see whether we've had anything of interest. So we just had the PMI from the UK, which again, it's not really that big of a number for gold, but it can cause a little bit of trouble. So nothing on the Middle East that I can see right now. Focus is on the Bank of England speeches and surveys and PMI and blah. So yeah, the only thing I see about Asia is that Chinese shares in Hong Kong tumbled as investors paused their world-beating surge over the last month. A weaker yen boosted Japanese markets, but oil prices rose for the third day in a row, reading, amid Middle East tensions. Okay, so that's, it is what it is, right? But I don't see anything new about that Middle East conflict. So that's probably not going to be a catalyst for now. Obviously, that can change throughout the day. Let's drill down into the profiles and the intraday levels. We had Asia low that settled around 26.62. And if you can see, I don't know whether you can see, let's make that super big because we're not old. So if you can see, we kind of touched it and moved away from it. Now, I am watching Bookmap. There are some buyers here. Another interesting point is that we do have the average session London range low at 26.61.6, which we kind of narrowly missed for now. And then I saw like buyers stepping in, so I figured let's try and front run this and see what happens. Just in case that they do want to fail the auction. because we had the value acceptance that kind of rotated through the entirety of the value. So the value area from London, so again, taking the short in London for those calculations, is 26.75.3 was the value high. I'm going to put a line. I can't wait until we actually get like the TPO profiles, because obviously it's taking up time as I'm drawing levels and stuff. And I tried to draw out some of them, but obviously we go through multiple charts, so then I had to like keep, which is fine, you know, what else are we going to do? 26.75.3 was value high, so I'm just going to do the coordinates because that might be quicker. So 26.75.3, whoops, what did I do there? Okay, and then value low was actually right above this initial balance point, I believe. I know. That was the second 30 minutes. Okay, so I think I was just staring at crude oil like 3 seconds ago, so I'm confusing those two. So new value low, 26.76. Okay, so that's value low. Now, as you can see, opened slightly above value, went into a pretty fierce value acceptance, overshot it, which is the expected behavior for this. And now we're kind of sitting around those interesting areas of Asia low, average session range low, trying to fail the auction. So that's what the trade is, right? So you're trying to fail the auction around a level that is known to do a little stop run, sometimes not so little, but today it's fairly minor. And then what I'm trying to do here is to run it back to the value low. So I'm not aiming for the entire, rotation through this initial balance. Now, the initial balance I'm going to mark with the yellow rectangle, as I always do. And, this was what we were looking for. Basically, value acceptance. Initial balance took it out of value. Now we're basically in a trade that is technically a responsive activity trade. So what does that mean? We went below value. And if you're gonna think about maybe being more range bound, what tends to happen is that the market makers will try and take the price back to value, because that's a distribution curve from yesterday. Is definitely of interest. It's where most of the business was happening. So if we can spend the next next 10 minutes or so spending time inside this initial balance, that is going to mean they're having trouble finding further business outside of this area. And that minimizes the potential for further downside. So when I saw some buyers stepping in, I was looking for it to fail the auction around Asia low anyway. Now, the second part of this story, so rather than going longs, let's hypothesize what happens if we go further short, right? If we do manage to go down. How would that look? Well, it would first and foremost reject the initial balance. You would see some selling coming in, obviously, and then we would spend time outside of it. Now, for now, we're building structure, right? What does that mean? It means that you have 30-minute candles that are no longer one time framing lower for now, right? I am front running this trade. Like I said, it's a small trade just to kind of test the waters and to see whether we can start spending time during this session inside the initial balance. So I actually need to include the lows here. It kind of defaulted to the close of the candle. So we are spending time inside the initial balance, trying to create a bullish engulfing on a 30-minute chart, but it's a very large chart, right? So what do we have on a 5-minute chart and on the profile? So profile has balance on a slightly larger time frame up around the value low, around 26.69 actually. And that's kind of ballpark where my target is. It's not the biggest trade because the chart does not offer the big trade right now. It's literally just there to give me, a little bit of confluence and stuff. But what I'm looking at is a return to that previous area of balance. And you can see that a little bit here. So you have those higher volume nodes higher up. And then we don't really have anything just yet for this session further down. But if I try to zoom out, probably best to go on a 30-minute chart actually. You will see that we have some more balance further down to 26.56 and then lower volume areas. If we do get down here and manage to assault that with quite some power, then we'll have that distribution into liquidation phase happening, and we may have a nice momentum trade down. Tomorrow is NFP. Right, so NFP is a pretty big release. It's actually probably one of the bigger releases or biggest leading indicators of how the economy is doing. And you can have a couple of things happening on NFP weeks. Now, this week we've had Middle East as a catalyst. Away from that, it can be a bit of a nothing nonsense week with a lot of ranging, non-committal movement and all of that. So again, be on the defense whenever you're running a momentum trade around the NFP, around FOMC as well. That can cause the same kind of issues because everybody's waiting, right? Nobody wants to really get involved until they actually know what the leading indicators are saying. And then they try to position themselves typically around the release and then the week after, right? So that's how the fundamentals releases do it. You know, they don't necessarily have an immediate reaction. They have a whipsaw and an algo spaz, but after that, it's just like, right, which side are we going to take here? And that takes time in macro time frames, I suppose. But yeah, so far we are spending, you know, a good chunk of time. On Bookmap, I can see that we have some orders to the upside at 26.66, right where this high of this candle is. So I'm going to drop down to a slightly lower time frame just to monitor what kind of price action we have, see where the volume point of control is. Now, the volume point of control, to me, it's not... I try to never get involved exactly at low time frame volume point of control because I feel that there's kind of two ways to go about it. First of all, the TPO point of control is a definite no for any sort of new positions. But the volume point of control on low time frames, all you're looking at is like an isolated area where most volume happened. And that can be a pretty good indicator of volume or reversals. So I still try and get involved away from point of controls, and then I use it as orientation. So right now we're actually right at point of control. Again, I said building structure. This is what it means. It builds volume, it builds structure. Right now we don't have any single prints. We are about to finish a 15-minute chart as well, and that is turning into a bit of a bullish engulfing. That is pretty strong, right? So that would be my first kind of my first indication that yes, we may be failing the auction. But since we're still inside the same 30-minute time frame, inside the same 30-minute TPO period, as we like to call those, it's not making any new lows. It's still having trouble finding business. So all of those are like little clues that you can use to figure out what is happening. But like any other skill, it takes time. And then looking at the 15-minute volume profile, the point of control is all the way up. Up at sort of 26.76. And I mean, if it gets there, awesome. But I'm not aiming for anything like that. So I only want to get these 58 ticks back to value low, because value can actually be a very good continuation point for these sorts of moves. So I don't want to be super ambitious with this particular move. So basically I'm just going to take a partial and run. That will be it. Right, so far it's going okay. Again, I'm going to drop down to some lower time frames, maybe even look at the 100 tick chart, just to see that movement a little bit more, to get a feel for it. Right now the point of control from a low time frame is not causing much trouble. and the price is managing to stay above it for now. But again, it's market generated information. These things can change on the fly. That's why you have to monitor some of these intraday trades that you don't want to leave on for too long, and they're more like scalpy type trades. Tayo Ikun says, can we analyze gold later, please? Well, we're analyzing gold right now. At least that's what I think that I'm doing here. If not, I probably need more coffee. But this is MGC, right? This is a gold trade. So yeah, it's gold. Yeah. So hopefully you've been listening. I don't know when you joined. Maybe you joined a bit later. But yeah, this is a gold trade. This is a gold chart. We are analyzing gold. Or I'm just in a twilight zone, in an alternate dimension where MGC is a symbol for crude oil or something. Yeah. All right. So, yeah, I see we have a troll. All this talk for a few points profit. Yeah, patience, man. Patience, dude. Guess what? Time is required, especially for an out-of-hours session, which is gold, during London. This is not an active session for gold, right? So you're not going to get crazy movement that you get during New York. So if this is your first time joining us, your expectations are, you need to manage your expectations, man. And also your username is just great. You're taking the username of a well-established professional and deciding that you're gonna put some mud onto his name. So I don't appreciate people like that. They immediately radiate negativity, and you've obviously stepped into the internet world with a very negative mindset, right? And you're like, oh, all this talk for 15 takes. It's like, yeah, great, yeah, few points profit. Let's see your trade report, if you have one. Yeah, exactly. Thank you, Bruno. Bruno is excellent. Like, he just deals with the trolls so efficiently. I'm very, very appreciative for our lovely moderator here. Yes, off with his head. That's how it is. He doesn't exist. So it's like, when you're trying to ignore and blank someone, you pretend, like when you were kids, like you pretend like they're not there. It's like they're talking at you and you're like, oh, is that the wind? So that's kind of how we should approach trolling. Especially this early in the morning. My fuse for dealing with trolling and bantering with them is a little bit lower than when I'm a little bit more awake. So yeah, off you go, dude. Go troll somewhere else. Right. So right now, nothing else has changed. I do want to see the price going above these 2666.4s, because that's where the high of the previous range sort of is. We have a localized supply right around this area. And by the way, what I'm doing here, I'm talking you through how you should look at any trade that you are doing, rather than just going, oh, I'm in a trade, that's it. This is a scalpy type trade, so I don't want it going too far against me. Yes, I have a disaster stop, but I absolutely do not want this just smacking through and me just going, I'm just going to let it. I do that sometimes, but it's usually when I'm planning to keep a trade for like a couple of hours. And, I'm expecting to get 150, 200 ticks out of it, rather than, just like 58 ticks, which for me is on the lower side. That's still a positive risk reward. And remember, I don't have a super high accuracy because I aim for 1.5, 2R, 3R, 4R multiples. That requires, a few attempts maybe sometimes, especially if we have more volatile days. This supply here is causing a little bit of trouble. So that is the supply that I was talking about. We really need to push into this. Yeah, We'll keep an eye on this supply of 2666 just in case that we don't get what we want. But I have like 9 minutes now to wait until the end of this TPO period. And really, I shouldn't be doing anything until I see whether we are indeed closing inside the initial balance or not. If we're not closing back inside the initial balance, obviously that's going to mean this trade is invalidated. And everything that I'm saying here is how I'm actively monitoring trades for continuation, invalidation, whether you want to keep it, whether you should take it off, and whether you should take it off earlier as well. I'm not in favor of moving my stops to break even, because frequently when you have something like bullish engulfing, what can happen is that the price goes and retests the point of market shift, and that's any area where you had a reversal, obvious reversal, because you can get a quicker reversal, and then they sort of need to pick up more orders in order to push it higher. And the next logical point for that kind of a price activity would be to go back where the market shift actually happened. Where is that? It's at the point of the equilibrium of the two candles that caused the reversal, and that's this engulfing candle and the previous one, open of the previous candle. Why? Because we smashed through it and then we closed higher. So something happened there. Somebody was very interested in taking the price there. So I will give it the benefit of the doubt to retest the entry. And at which point, a lot of people are like, oh my God, I'm gonna, I need to put break even. And then they get taken out of the perfectly good trade only to see it go their way. So I actually come to anticipate tests of what I call the conterminous lines. Conterminous lines are common price points where that market shift occurred. But it has to have a level, it has to have a context. It can't just be, oh, we're bullish engulfing, let's just go in. It has to make sense from a larger time frame, lower time frame, profile, volume profile, some references that we use to help us make better trading decisions. And, if it's a small profit, it's a small profit. If it's a small loss, it's a small loss. But it's, the main thing behind this sort of a process is so that you are always on almost like defense mode, and expecting things to go wrong to a degree. However, still trusting that the failed auction will do its thing because you might have observed it so many times before. And failed auctions are my primary setups that are by far outperforming any other setups that I take. So, that's something to consider. Now, one thing that I'm not liking about this trade at the moment is that 66 that it's causing some trouble. So we know that there's a 5-minute supply there. As I'm talking, I can see some orders are building up around 64, 64.3. So that's just like above my area. So again, I will give it a benefit of the doubt to test that area before I do anything with this. So some time and patience still needs to be given to the trades that you're considering. But obviously you need to understand as much as possible why you're getting involved. So for me, that's the low of Asia. So Asia low was basically touched and even taken out by like a couple of ticks. The price reversed away from it and went into a failed auction potential. We're spending time inside initial balance, so all of those are positives. But now we need to see that committed bid away from the lows. And obviously a continuation of some sort. So yeah, let's see if this looks good still in about 5 minutes. Yeah, so we're gonna have some questions now. Blue Collar Trades says, why does gold not go up when the general market is going down? Okay, so basically we used to have the traditional portfolio theory. We used to have, people who were doing the whole negative correlation between equities and gold, but that broke down during COVID in particular, because we thought back then, oh my God, it's a huge risk event, right? To economy, to everything. And yet what we had was crude oil, gold, equities, all going in the same direction, like by a factor of 1, like the correlation was crazy. So we were like, what is going on here? And since then, these traditional correlations have actually broke down. So, markets change. Markets are in ever evolving state of flux. The economy that we have now is not the same economy that we had even last year, let alone 4 years ago, 10 years ago, 15 years ago. So naturally, some of these relationships will definitely break down. All right, so they on that pop down, there was actually an absorption of some orders there. So we're going to see if that was it. And if I show you a 15-minute chart, apropos what I was just talking about, so I said that point of contact where we shifted the price direction, that's where the market makers usually need to go and pick up more orders. Now, if I were to put my stop to break even and be afraid of that, what's going to happen is that I would be out and I would just be like, okay, it's not a failed auction. And yet it very quickly bounced away from it. So right now, there's nothing else for me to do. Everything that we are anticipating to happen is happening. The next step would be the breakthrough 2666. But going back to the gold versus equities correlation, it's only applicable if you have some kind of a war situation like we had, yesterday and the day before. Sorry, the day before was when we had the news. Then you'll see those traditional correlations come back into consideration to a degree. So we had gold up, crude oil up, equities down. But even so, I thought that the equities, while the overreaction during the initial balance was pretty fierce, the rest of the day was a little bit meh. Like they didn't actually go into the crazy movement that we saw in crude oil and gold. So again, but yeah, markets change, correlations change. There were many arbitrage traders that used to run their basic trade was look for a divergence between Brent crude and WTI crude, and then short one, long the other, and wait until they converge again. That correlation broke down, and then it wasn't really happening for many years. Now I think it's back because of the computers have gotten more efficient at dealing with arbitrage opportunities. But back then, there were a lot of people who lost their jobs because that was their jam, right? Like, what do you do? Oh, I'm a Brent WTI spread trader. And then when the spread went away, a bunch of them lost money, obviously. So the strategy just wasn't really working. And, you have to adapt with the market. If you don't, then we're going to be having some trouble, right? Sushim says, what time is the best to trade commodities? Well, obviously during their active trading hours, right? So gold trades on COMEX when you will see much more violent movement. Again, this is all very slow because it is an out-of-hours session. There's still some movement, but the entire London session right now is 148. And this is actually quite a lot of movement for London. Usually it's just a very range-bound and a bit of a nothing burger, as John Hoagland likes to say. So yeah, COMEX and NYMEX are the most active sessions for metals and crude oil, respectively. And some metals trade on NYMEX as well, like platinum, for example. It actually trades on NYMEX. But it's a weird one because it technically starts trading with volume when COMEX starts. I don't know how they figured that out, that platinum should belong to a NYMEX exchange, but it is what it is. So if you're going to trade gold and you're expecting a lot of movement, London is not going to be a session for you, right? You're going to be sat there in trades for a long time, and it requires patience, My preference for London would be DAX, like I've said a million times before, but we don't have it yet, so we got to work with what we've got in order to run these London live streams. All right, I'm not liking this price action. We've spent way too much time doing nothing, and we're still causing trouble from that 66, so I'm going to just bail and sit and wait and see what's happening because this is way too slow, and that's another thing I look for in a failed auction is the price velocity. If we're starting to amble around, there's no momentum, then that can be a sign of an impending range-bound day rather than a proper failed auction, which should happen fairly quickly. And by the time that we got to, the second 30-minute time frame when we're spending time into inside the initial balance, we already should have been like halfway through it, and we're nowhere near that. So yeah, this is probably going to be a slow grind. So we're going to move away to another market now. This is kind of how I like to approach my day. You know, I try a trade. If I don't get what I want out of it, I will just move on to something else. I wanted to see a quick a quick break of those 66s. They are still causing trouble. We are now not even able to hold the point of control from the volume profile, the localized point of control, as I like to refer to them. So yeah, let's move on to something else. Let's see if we can find some action anywhere else. So what you do now is completely put that trade out of your mind, right? As if it never existed. This is one thing that people get married to. They're like, oh, but I need to see, do I have a short? You don't have a short. We're at the edges of ranges. Statistically, and if you look at the profit margin that the gold short would provide, it's just not there. We're bottom of the range. Average session low is there. Asia London low is there. Like, you would need a lot of power, which may happen, but it's not in my plan, because for shorts, I want to be way up here. I want to be way up at 2670, not down at 2666. I'm not really in favor of breakout trades in that way. If I do a breakout trade, it will be towards a level of reference, like a value area, previous days high and low. If we're opening outside of it, you know, those are the setups that generally lend themselves much better than just pure breakouts out of the big areas. So I'm going to wait on gold. And again, like it didn't happen, scratch trade, you know, move on, right? That's kind of what we mean by, it's like, okay, let's reset. And it doesn't mean reset a combine. It means reset your mind to clear everything that you thought should happen and have any sort of emotional attachments that you might have formed to the trade. That needs to be wiped, as if you're like Drew Barrymore in 51st Dates, right? As if you have a short-term memory problem as a result of a TBI, and you effectively just your plate gets wiped clean. Your slate gets wiped clean. Plate, really? Wow. Mornings, man. Let me have another sip of coffee. There. So yeah, let's have a look at crude oil, whether it's picked up some speed or not. Ah, great. We have a range-bound day in crude oil. Hey. Why do I say range-bound day? Okay, let's see. It's a neutral day type, so I don't like that. This is all the stuff from yesterday. So let's, again, reset. Let's, I think I did mark up. Yeah, so I marked up the crude oil chart already when I was getting ready for the this session. Okay, so maybe I should be looking at crude oil, because I had the London value low test as a potential short, which is where we came from before. It kind of went without me. Oh well. Now we have a range bound day, right? So what do I mean by that? Well, the initial balance now has extensions to both sides. And this is where something like Dolby style trading can come in. This was the initial balance. And as you can see, we smashed through the low, we smashed through the high. So now we have a potential for a range-bound situation, right? Copper. Okay, I need to have some levels from copper, so give me a second. And let's take another question while I do that. So I changed from mini to micros, and a lot of mental hurdles changed. Micros do make money. I mean, I think people don't give enough credit to the emotional side of things when you're trying to run a trade, you know, because emotions come from the primal side of us, right? They don't come from like our prefrontal cortex, and they certainly don't do, they won't do you well in trading, right? If you're too emotional about a particular setup, it's not great, because you're going to make bad decisions. We never make great decisions from an emotional standpoint. So the more fear, anger, frustration you feel, that's going to cause you to make bad trading decisions. And that's why it's not that micros are be all and end all, but if you're struggling with that, it's definitely something to consider, that micros take away the emotional part, because you're suddenly not looking at very large amounts of money that might be considerable for you. You know, you might be someone who has not been in a high moneyed environment before, and you know, you find it difficult to see your prices jumping up and down by $200-300 or 1,000, you know, 3,000-4,000 when you start trading with size. That's like nothing, you know. And you know, it takes a mental adjustment. So if that's bothering you, you need to take heed of that and just go, okay, well, I need to do something about this. I need to get used to it. And one way to get used to it would be, does anybody know what month we are trading copper in? Is it December? Yeah, it's December. Okay, so let's grab that. I'm just grabbing some options data here so that I can have a look at the confluences. Yeah, so let's change that. All right. Copper. Okay, copper to me has a value acceptance now, which is finished. I don't have a good setup in copper at all right now. But let's just, what's happened here? Okay. Let's see. I just have a little error on one of my charts. Let me just deal with that. That's better. Okay, so I don't have a great setup. There is a level around the round number of 460. Let's have a look at copper for a second. So it opened above value, went into a gap fill. So that could have been a setup, although it's not a setup that I like doing on copper that early in the day. Because a lot of the times London session will be a bit muted, and then it sort of picks up speed into the overlap. So again, this is all probably a result of the Middle East stuff and then overreactions, and then we're into some corrections. And that's something to consider as well. You know, did we overshoot some levels because of the Middle East conflict? And can we maybe try and, you know, maybe fade those moves ahead of the NFP tomorrow? That could be something to consider. But yeah, 460 is a put support 0 DT. Now, if we overshoot that, there is a very good chance that we just keep going lower. From the slightly larger time frame outlook on a 30-minute chart, we are in the middle of nowhere, middle of the middle. Why do I say that? Because the previous swing low was down here, previous swing high was up here, and you can see that reaction. We had a classic stop run through Asia highs, reversal, and now we're sort of no man's land. So I know that some people say that, you know, it's very difficult catching tops and bottoms, but if you have the tools that will algorithmically also show you the ranges and a whole bunch of other stuff, you can actually scan for these pretty early on. And I'm actually one of the people that does pretty well. Again, I spoke about this yesterday, didn't I? So, you know, people say, oh, you're great at catching tops and bottoms. That's not the way I see it. I'm not catching anything. I'm not catching a bottom or a top. I am observing price action around the previous high or low for a potential reversal. And to me, that's a very different thing than if we're just in free fall or like shooting up to the sky at all-time highs and you're just trying to catch either a falling knife or a rocket, which, you know, neither really works well. I always, when I'm about to do a reversal trade, I always have a previous point of reference. This is why I don't like trading at all-time highs, and this is why I don't like trading away from any structure, because these sort of areas are bad trade locations, right? So it's like here you don't have much of an edge. But down here, you know that some buyers already existed. Now, depending on how many times we smacked into it and reacted away from it, you get levels that are weaker and weaker and weaker the more times they're tested, because the more times they're tested, the more orders are filled, and then nobody else is interested in them. And at one point, it's kind of like chopping a tree down, right? So you keep chopping, keep chopping, keep chopping. At some point, the tree is going to fall. So keep that analogy in your head whenever you're looking for breakout trades versus reversal trades. I don't classify myself as, are you a momentum trader? Yes, when the opportunity presents itself. Are you a range-bound trader? Yes, if we're in a range-bound day. But, those skills don't exactly come overnight. You have to be very good at recognizing when they're good to trade. You have to recognize, like, for example, this crude oil chart now. So I'm going to jump back. So I don't have anything on copper. This is not, I don't like the look of it. I don't like trade location. I need it to be somewhere closer to swing extreme so that we can effectively get involved. Right now, post value acceptance, fading that, quite dangerous. And to make matters a bit more complicated, the 460 level is also the high volume level where the gamma exposure could flip from either negative to positive or positive to negative. And that means that you can have a huge springboard move away from it. But to me, it's just not a high probability trade because of the chart location that particular product is located in. So I'm going to move away from that. Now, crude oil is going into a range-bound neutral day, but I don't have enough profit margin for this. We are only barely 10 ticks away from overnight VWAP, which is what my target is for these trades, right? And I want to have at the very least, 40, maybe 45, even 50, and the profit margin is just not there. So again, being very selective, with my choices of where I'm going to get involved. I'm glad I bailed out of that gold trade as well, even though it still might go into a range-bound day. So that's kind of what I think gold is doing. It's way too slow for anything. It's like smashing through lows, reversing, doesn't go anywhere, smash through low, reverses again. So yeah, that's a hallmark of a range-bound day. Again, not unusual because we are in and out of our session. And there will be a lot of, neutral day types. In fact, if we look at edge fold details, let me have a look at it quickly. I used to do all of the statistical probes and tests and my counting algorithms by myself. So I'm actually very glad that Edgeful has decided to step into the game and make everybody's life a little bit easier. So, now if I want a report, I can just reach out to Andre and ask him for it. So that's pretty awesome. All right, I'm looking for a shortened session, which means 8:30. And initial balance breakouts is the report I'm looking for. Yeah, so it's a bit better than 50-50, but basically London moves for the initial balance breakout to both sides. It's kind of sitting at about 41%. And there can be single breaks as well, but to me, I would like to see a bit more of a edge there. I would like to see 65, 70%. Anything under that is still verging on that sort of 50-50 chance. So that's a no from me. Anything else that I can see? No. Okay. So yeah, again, whether you get involved in a range-bound trade during London, that's up to you. But for me, I want to remain very selective and stick to super high probability setups because, that's what I do. And if that's not enough trading for you, well, tough luck, Your problem, not mine, I suppose. All right, so yeah, going back to the micros versus minis, I find that whenever I'm starting a new sort of XFA and stuff, if I go in plowing with like full minis, 2 lots, the pain point is so much greater no matter what combine you're in, because even though nominal value and the margin is reflective of a larger account, the prop firm will only give you a fraction of that amount, right? So we're only really looking at between 2K and 4.5K of drawdown. Now, I've been lucky in my life and my career to have access to quite a lot of capital and to, from my previous careers and my other businesses. And basically, I've always started with like no less than about like my very first account was a 2K account, but then very quickly, once I proved that I can do well, once I proved competence, I immediately added like 60K to it, and that was the pot that I was working with, and then I quickly ran that up to like $500,000. So it's very difficult to go back down to very small sizes, and this is why I keep the ticks on the chart. Because whenever I see that it's like, oh, it's not enough profit, immediately my brain defaults to what I'm used to. And then I'm like, oh, I'm just going to extend the target now so that I can. So I don't have the fear and frustration of like, oh, is this the right setup? I know that it is the right setup because I know the system very well. But to me, it's the problem of holding on to trades too long. So I almost have like an opposite problem to most people. Where they will be fearful of the position that they're in, but I'm not fearful. I'm absolutely confident in that position. And then I'm like, well, instead of 70 ticks, which is my default target, I start stepping away from that. And then I go, I'm just going to make a little bit more out of that. So let's increase it to 120. And then we go into the waters of being unrealistic with your own results. So that's why I keep the ticks on the chart so that every trade looks the same as the ones that I take in my other private company account, right? And that's been much easier for me, right? Rather than focusing on the monetary value, I'm just focusing on the ticks, and every trade looks identical because it's like you're in how many ticks profit, how many ticks drawdown. Doesn't matter what the monetary outcome of that is. And in fact, on a lot of the days, I will even keep when I'm not online, I will even keep the realized and unrealized profit completely locked up. And I also go to put no profit on the dome so that at any one point that I don't even think about monetary values, and I will only check the balance maybe towards the end of the day. Now, granted, that's worked against me a couple of times when I was trading full size and I didn't pay attention to it. And then I did like a little bit of flipping and flopping on the day. So I got to the daily loss limit quicker than I thought I would have. But again, that's a problem with tactical skills, right? That's a problem of not following the plan, or maybe not being super clear on where you want to get involved. So it's an ever-evolving process. Nobody's perfect. You're always going to have times of the day, year, month when you're a little bit off. So you have to work with that. And if it so happens that you hit your max loss on the day, or daily loss on the day, because I always work with a daily loss limit, so be it. There's always another day. It's fine. But you can't let it overcome you and do the negative self-talk and everything. Trading is very much a journey of self-discovery, as it is a journey to abundance, prosperity, wealth, right? And I would actually say that not enough is being done to tackle the emotional side of things. I'm actually very happy that Topstep now has Sean, who is like a therapist, and obviously we've had Jared Tendler, who also works with high-level achievers, and a whole bunch of people that have done very well in poker and trading. And that's more important to me than, what level are you using? The emotional state from which you are acting will be the ultimate decider of your success or failure, if we can call it a failure. If you never quit, is it really a failure? That's the way I look at it. That's why my mom always said, Dee, don't put your head through the wall. Be a little bit more chill. But, I've always had that drive, and I think one of the reasons why I've had several businesses that did make it quite nicely is because of that drive, right? Because I don't give up. And you have to be like that in trading. Okay, today, maybe you didn't do well, right? Maybe you didn't do well. Go journal. Go see what happened. How did you feel? Did you make any mistakes? Did you follow your plan? Is your plan flawed? That's like the first step that any trader should focus on before you get to psychological things. Are your levels actually working? Like when you do, let's say, longs of VWAP, does that work to like a statistical relevance? Is it working for you like 50% of the time? Or is it like working once in a blue moon for a $1 million trade and then nothing. That's a flawed strategy then. If you can't find a strategy that is repeatable day in, day out for intraday trading, that's maybe not a strategy to use intraday. Maybe you can use it as swing trading, but you know, you can do that in some other accounts, right? You can do that in your personal account or run a swing trade off of the daily VWAP bounce, for example. But it's not going to be a strategy that's going to appear very often. And if you keep trying to do the same strategy that is ultimately A, low occurring, so low frequency of occurrence, and B, doesn't happen every day, and low frequency of occurrence and low accuracy, meaning that when it does appear, a lot of the times the level doesn't actually work. That's a flawed strategy, right? And you can't run that intraday. You need events that will happen nearly every day, sometimes even multiple times a day. Like whenever I look at 3-4 instruments, I can usually find at least a couple of failed auctions that are coming from very, very strong levels, right? And that's what I look for. And I have other setups like sustained auctions, yes, in case of a gap fill. Value acceptance says, again, in very specific cases, especially if we're turning away from a swing extreme or something. But yeah, all of that has to come into play. And if you've got all of that, if you're like, oh yeah, my level worked out, but then you did a whole bunch of stupid trades on the way up to it or down to it, what's that? Is that a strategy being flawed, or is that you malfunctioning? It's the, you know, what is it? PB cat error. What is that? Problem between keyboard and chair error, right? It's not a problem with strategy. It's a problem here, right? It's something that IT support used to have like as an abbreviation to like people who are doing stupid things, and then they're calling IT support and going, it's not working. So, you know, PB cat error. So, you know, is it that, or is it, you know, flawed strategy? You have to figure that one out first. And if micros help you to move away from stupid behaviors, then trade micros. There will be time to scale up. That's like, you know, now that we have micros, scaling up by 1 micro is like the easiest thing in the world. Back in the day, you didn't have micros. When I started trading, you didn't have micros. And up until a few years ago, it was either 1 lot or 2 lot. So your scale up from 1 to 2 is 100% increase in your position size. And many people didn't survive that, right? It's very difficult to do. Is there a kicker in my coffee? Well, like, you mean like class A drugs or something? I don't know. I'm actually drinking matcha tea, so it's like pretty boring. I like to have a little bit of lion's mane some days. Sometimes I forget it, and I think you can actually tell when maybe my thoughts are not as connected, and I'm like, what do I talk about this now? But lion's mane definitely helps me to maybe connect some of the thoughts in a slightly more efficient way, if you want to look at it that way. But yeah, is there a kicker in my coffee? Nothing illegal. Put it that way. Yeah, it's just like caffeine, right? Nothing unusual. Caffeine and a bit of mushrooms, so yeah. But no psychedelics or anything. Just plain old lion's mane, which I actually don't like in my coffee, so I take it like in pill form. I don't like the taste of it, and I think it ruins my coffees. I'm a huge coffee connoisseur, and you know, every time somebody serves me instant coffee, I'm just like, what the hell is that? Wum. I can't stand instant coffee. I don't know how people can drink that crap. So yeah, I always have to have like gourmand coffees and stuff. And away from coffee, I like matcha tea because I think it helps you with focus. It helps you with calmness. So that's usually my drink of choice for after my morning coffee. And then sometimes I have an additional espresso if I feel that my energy is kind of dipping and I'm not quite focusing. But once I'm done with the London session, I typically do go and have a yoga nidra session. To reset the mind. So what is that? It's sleep, right? Yoga nidra means sleep, but it's sort of like a deep rest. I don't necessarily sleep during those sessions. It's just that you completely focus in the moment. It's similar to meditation, but it's just a scanning of your body and different parts of your body, and just that calmness of not having the world and thoughts that you have constantly assaulting you, it's incredibly restful. So even if I don't necessarily fall asleep during it, it definitely resets my brain for the next session. I highly suggest that if you're going to trade through 2 sessions, that you do something similar. So don't trade the overlap. Overlap is always full of mess and weirdness. Try to do something else. You know, some people like to walk dogs. Some people like to go and do some exercise. Other people like to, you know, play video games. I even, you know, if I don't feel like a yoga nidra, I will go find a video game that I'm playing at the moment and just spend, you know, maybe an hour or something, just, you know, removing myself from this world and going into the virtual world for a little bit. And I you know, I enjoy that. That's equally restful. So anything that can get you away from worry, frustration, fear, that will help you reset your mind for the next session, that's always a good thing. Does anyone have advice on creating an effective trading plan? Well, this is what I do for people in our coaching service and our courses. I actually show you in, I have the pro development program, so in level 1 towards the end, I show you what should go into your weekly plan. And then in module 2, I show you what I use in my own intraday plan. So that's how I create things. It's always similar levels. It's always same reference points. It's always the same time of day. So anytime you move away from that and you try and trade a new session that you've never traded before, like for example, I had someone recently, like if you're listening, you know who you are, who didn't normally trade the Asia session, got a new XFA, and decided for whatever reason to start looking at the Asia session and trading it. Obviously, the day didn't go well, so the first step there was to stop trading Asia session. Let's go back to what we know. Let's go back to the experiential data that you already have, so same time of day, and don't try not to step away from it. You know, try not to do anything that you haven't done before and you haven't tested through a combine as a proof of concept before you start trading it. But for me, time of day and consistency around the time of day when you're finding setups, that's a huge part of what I do. That's a huge part of my method, right? I'm not going to be like, just to give you a very simple example, if we get to the end of the crude oil session today and I see a potential failed auction where we didn't manage to find business outside of initial balance, I'm not going to be looking for a failed auction at that time of day. Why? Because statistically, I know that failed auctions into settlement are usually either partials, so they just drop and then nothing, or they just start floating around the initial balance edge and they never really do anything. So they're a low probability setup for that time of day. When they're the highest probability, they're right after initial balance of NYMEX is formed, which is around 9 a.m. Central, and into Euro close. So those sort of like 90 minutes, 2 hours, that's the time of day when I will be looking for failed auctions if I have a decent level. But sometimes even if I don't have a decent level and the auction is struggling, I will still try it. I did that last week on fast markets. Worked out great. I got 63 ticks out of it. So, you know, it's all down to time of day, consistency, type of setup you're looking for, understanding what setups come for that time of day. But what I see people do a lot is very random things. It's like, I have a VWAP, I'm going to long it. Oh, what's the time of day? Oh, it's noon in London. Do you have bounces of VWAP on NQ during London? Yeah, sometimes. Is it a great trade with lots of follow through? Usually not. Why? Because you have maybe a range bound day. You know, a lot of the time Nasdaq is going to be super slow for London, right? But out of all the instruments, it can actually have a little bit of action. During the summertime, we had 18 points of average session range on NQ for London. Summertime slowness, you know, summer doldrums and all that. But yeah, was it then a great choice to, you know, just run a momentum trade in the light of a clear range bound day? Probably not. So, you know. Ahmed says, are you going to be on slow markets today? So the problem with slow markets and me is that I know that people think that I never sleep, but I actually do go to bed fairly early, right? So I'm already in bed. by about 10 o'clock my time, 10 p.m. Slow markets class doesn't start until 1:30 a.m. my time. Okay, I'm based in London, based in the UK, and for me, sleep is quite important, especially you get to like mid-40s. Sleep becomes very important. It's gone are the days when I was able to have high performance and do a whole bunch of stuff, go to the gym for 3 hours, walk the dogs twice a day, do my trading. Those days are long gone, right? I sadly, I'm still a reasonably young person, although I'm not a spring chicken. But yeah, I did notice that my energy levels are just not what they used to be. So I try to keep in mind those kind of things. So maybe at some point we may have me joining the slow markets class. But for now, I'm just not able to not sleep and then still do everything that I need to do in a day. It would be extremely difficult for me. But yes, I will be open to joining. However, I do have some news for you in regards to the guests on the London session. I'm in touch with Coach Ray. Coach Ray is one of my market stalkers. We got to know each other in 2019 when he came to me for coaching. It's been an absolute pleasure to watch him grow into a confident trader and a coach himself, right? So it's so awesome. Coach Ray is actually going to be joining me on Thursdays. So that's probably going to happen from next week. And he's going to join me for the first half an hour. He is located in California, so obviously for him it is late, but not as late as it is for some of the other people who are located elsewhere in the States. And he has kindly agreed to be my co-host for Thursdays. So we're going to have Coach Ray here. We can ask him a whole bunch of questions. And I just love the way he's put his own twist on what I was doing at the time and what I'm doing now. And we have very, very similar complementary approaches because of that. Now, obviously, there's always going to be differences. We're not the same people. He's got his own thing. I've got my own thing. But it is based in the same sort of core outlook of larger time frame analysis, supply and demand, drill it back into volume and TPO profile, and then look for average ranges to come into play. So it's going to be very exciting having Coach Ray here. I'm very looking forward to it very much. All right, guys, that's it for today. Let me see if I've got any plugs. Obviously, we have Pass with the Pros. If I can get you a link, I will. If not, keep an eye out on Pass with the Pros during the main broadcast. They will definitely be posting it multiple times per day. Great segment. I think it's an awesome way to have people coming on, trading with us, and all that good stuff. So I'm just scrolling through this. Scrolling. Yeah, so we are... Oh, I see. Excellent. Okay, I didn't know this. So usually I have little tags next to this. But we're going to have Pass with the Pros today during my segment. So I'm going to be on for Market Stalking with Dee, and we're going to have Keegan P, myself, and Coach J doing... Pass with the Pros. I love that. I've been enjoying so much the segment. I didn't realize they're going to put this up. Yay. All right, Keegan, I guess I will see him later. Thank you so much for joining me. You have been pretty amazing as always. You always have excellent questions. So yeah, let's try and not mess it up into the end of the week, because as we're coming into Friday, NFP, you really don't want to be doing stupid things. So take it slow. Make sure you don't spend too much time staring at the markets, because that tends to distort your perception. If you're looking for a trade, you will find it. But that's pretty much it. Enjoy the rest of the broadcast. I will see you later for Market Stalking with Dee and Pass with the Pros with Keegan and Coach J. I'm Deeyana Angelo, and this has been the London session on TopstepTV. Take care.